With Italy's recent national election, Japan's monetary easing and the UK's downgrade, the currency markets have seen some interesting movements, and growing numbers of private investors now have a route to market through retail platforms such as FinFX. Chief Business Development Officer Stan Klebaner joins me now. Stan, welcome.
Thank you very much, Nick.
What's your view on the trading conditions in the FX market at the moment?
Today, I feel that more so than ever, FX traders are feeling more empowered. There's an arms race taking place at the top amongst brokers that look to differentiate based upon the ability to offer unique selling points. On the other end of the spectrum, we have the newer market entrants that take price and price considerations as a means to compete. And what I mean by that is leverage, commission tiers, as well as swap interest are means in which they do that. This dynamic undoubtedly adds value to the underlying trader in creating a more competitive FX marketplace.
So you began in 2010. Tell us about the last 3 years at FinFX.
Sure. So we launched the brand in 2010 in focusing on the Nordic region. The objective was to concentrate on the relatively underserved market segment as a platform for worldwide expansion. FinFX, as of today, has achieved tremendous growth in both client acquisition as well as turnover metrics. And an interesting aside is, unlike our fellow brokers, we do not incorporate a level of online and offline marketing. Therefore, our success is attributed primarily to the reputation that we've built in the marketplace, coupled with the word of mouth and organic channels. Currently, we cater to over 10,000 clients in over 120 countries.
The EFX brokerage space is a globally competitive one. What's your sales pitch to the retail investor?
We look to position ourselves on 3 key principles. The first is price. Our rate model is significantly below market average, whereas retail clients can expect a Euro-USD spread of anywhere from 0.4 to 0.5 on average. We have a number of additional account types where spreads are even tighter. Overall, we understand the importance of transaction costs and look to mitigate them on behalf of our clients. We're a true STP broker, which means that we route order flow directly to our LPs. As a result, clients can benefit as a result of speed as well as a lack of manual intervention. From a customer service standpoint, FinFX prides itself on 24-hour multilingual support for both the retail and the institutional client segment. Today's clients absolutely value a broker's ability to cater to that requirement, which FinFX delivers on.
You talked about being an STP DMA broker. Talk us through how this benefits your clients.
Our execution model aligns our interests with that of the client. Traditional market makers extract revenue from client losses. Our agency model differs in that we're transaction-based. The more clients trade, the more money we make. It's that simple. From a commercial standpoint, clients can benefit from FinFX as a result of tight pricing coupled with favorable slippage conditions as well as low commission tiers.
So let's look at your corporate offering. What institutional products do you offer?
So, Nick, we have recently launched our proprietary API solution, which looks to connect price takers to our liquidity hub. Both aggregation and smart order routing are being done in-house, thus eliminating costs associated with third-party vendors. On the liquidity side, we have a compelling mix of liquidity, ranging from top-tier banks to regional, prime of prime, and non-bank participants. In addition to spot FX as well as metals, we will be integrating CFDs as well as FX options in order to cater to the requirements as posed by our clients. Our recently launched white label program has onboarded a number of strategic partners, which incorporate banks as well as brokerage firms that we're extremely happy to announce.
Finally, what's your strategic plan for 2013?
So, Nick, our objective in 2013 is to expand our global footprint. In doing so, we will look to become regulated in a number of jurisdictions in order to accommodate clients from varying locales. Marketing will start to play a more dominant role in our business practices as we look to bring more exposure to the FinFX brand. In order to complement the growth phase, we will look to hire additional sales members to pursue new markets. We will continue to distinguish our brokerage offering by focusing on pricing, execution, and bespoke customer service, while seeking to differentiate ourselves from the rest of the peers in the marketplace.
Stan, thank you.
I appreciate it. Thank you very much, Nick.